Good afternoon, goons. Welcome back to another episode of Jack Doll Trades. Here, as always, with Kaylin and our producer Sam. And today, I thought I would want to start off with a something I found in my notes. There's a trade I did back in 2016, and this is before I learned technical analysis. So I basically did this trade just on pure fundamental analysis, and it was like the best trade I did in like almost 7 years of investing. So just want to show that off a little bit. So to give you some context,
started trading.
I'm sorry.
So that was about a year before I even started trading.
Oh, is that? Oh, you've been trading a while, eh?
Yeah, I started in August of 2017.
So we started trading. So I learned technical analysis around that time, like just started around that time too. So we started around the
Oh
same
yeah.
time. Yeah, that's interesting. But yeah. So this was my investment portfolio from September 2016. I started off with $7,500 back in 2012. I put most of it into Apple, and I put about $1,100 Canadian into it in Tesla. So here's the Canadian price, but adjusted it was like $22.40 or something like that. I had 50 shares. And then over time, I sold the Apple and I sold the Facebook. Facebook broke even. Apple was up like 70 something percent. And I bought into Box and Solar City, which ended up being not so good investments. But these are good lessons though, eh? I think we talked about in an old episode. I don't know if you remember, I talked about Box. Like this was a case of like investing in the right industry, but not understanding that the big players can come in and destroy you. Because Box and Dropbox basically proved that the cloud storage business was viable. And then as soon as they proved that it's viable, Google, Amazon, and Apple came in and said, we're going to offer the same thing for $2.
Mm.
So
Instead of buying them out or something, right?
yeah, exactly. They
Yeah.
just absolutely wrecked them.
That's always the thing, man, with those little companies. It's like they're so like it's such a fine line between like you invest in them and either it's like what you said, Apple or Microsoft or something comes out with the same product for like a tenth of the price and just kills their company, or they come in and buy them and then the stock fucking 10 times overnight, right?
Yeah, yeah. I think it's like it depends on how fast you can grow, like if you have any like brand value or like customer base. But
Mhm.
I guess these guys didn't. And Apple's just like, fuck you guys. Thanks for making it work.
Yeah. Yeah, it's
Um,
so easy for them too. And then I guess if they start getting a hint of like, oh, this might be a viable business. Like I don't know anything about this company, but if they start thinking it's a viable business, then they're gonna hop in there and be like, all right, we gotta make this and make it better and cheaper.
yeah, exactly. Box is surviving now because they did a pivot a little bit late, but they're surviving basically on security features. Because for the longest time, they were the only cloud storage business that had some sort of FINRA um, um, I forgot what it was, some kind of security certificate where you could put medical records and like legal documents on their cloud storage and it would be like certifiable and then nobody else could do that. So then I think they're doing enterprise mostly right now.
Okay, that's cool. I'm
But yeah,
surprised they still don't have some like is there anything like that now for like medical reports and documents and things like that or no?
not to my knowledge, these guys are still the only ones because I don't think Apple and those guys are pursuing it because it's like it's a lot of regulation and paperwork to go through for a very small market. So I think Box kind of has that niche to themselves.
Okay.
Yeah, because a lot of their customers are like, so one of the features they have is like one of the largest customers base is hospitals. So the hospitals that are like very advanced, they'll have like iPads. So then let's say you go get what do you call it, a CT scan or something. It'll be on the
Mm.
iPad, but it'll be stored on the cloud, and they'll take it around and show their customers or their patients, and they could just pull up all the records and stuff like that on the iPad, and it'll be stored in their back end.
Oh, okay. So all three of these trades you said you did just purely on fundamentals, like you just looked into the company and was like, sounds good, let's buy it.
Yeah, yeah. Box was like cloud storage
And
before
that,
cloud storage was a thing.
and that was for a trade, or was that like were they originally like a long-term investment kind of thing?
I had no idea about trading back then. This was all like, where's the market's gonna go in 10 years? Let's get ahead of it.
Okay, so yeah, so you still have the right idea because when you said I bought these as a trade on fundamentals only, that's a little sketchy.
No, it was the Solar City what was a trade, but it was done on fundamentals only. But
Right,
it was only one trade. This one. Before that, it was like, yeah, you build solar roofs, and then so they had a different business model. That's why I invested in them. It's like there's a lot of solar roof companies, but their business model was interesting, where it's like instead of selling you the unit, they're just going to lease it to you. So the customer pays a very marginal rate over like 25 years. And then so the idea was if they could get enough of these things on people's roofs, they end up being an energy company because they own the energy.
Well, it's a good business plan. I mean, if you think of like even water heaters and stuff in houses, like when I was in my condo, we didn't own the water heater. Like we had to pay
Mhm.
our 60 or 70 bucks a month to rent the water heater as part of our like condo fees. So like that sort
Yeah.
of stuff's pretty cool. I think that's probably a lot more attractive to people too, like depending on how much money you can save as well. Like, because I know I've looked into solar panels and stuff like that, even for our house, just because like I'd like to have that sort of stuff. Get an electric vehicle, run it off a solar panel. It's basically costing you nothing. But anytime you do the math, like I haven't looked into it recently, but it just never works out. It's like, I'm going to put this solar panel on for, X thousands of dollars. And then it's like, okay, so if I drive this car and run my house off of it for 48 years, it's going to pay for itself. It's like, okay, that doesn't really make sense. Like, gas it is.
Yeah. Yeah, that I think that's what eventually killed them. The math could work, but then the utility companies killed them. Utilities like, yeah, we'll buy the energy from you, but at a fraction of what it's actually worth.
Mm. Speaking of energy, do you know much about like Enbridge and those guys, like the big gas companies? Because I know like a
Very,
lot of those companies, like I've looked into them briefly, like Northland Power and stuff like that. I know that a lot of the big energy companies are like they kind of keep trickling down. They pay wicked dividends, but like Enbridge, especially like a lot of the gas companies, like I don't know if you know anything about it. I'm just curious about like what their innovation is going to be like because like they're going to have to start doing something a little bit more sustainable if they aren't already. Like I said, I don't know much about them, but.
I looked into them briefly. I noticed they were very seasonal. Like coming out of the winter, their stocks would drop because energy gas usage would be lower. But I actually
Yeah,
owned I own what's that Algonquin Power and the other one you mentioned with the N, Northland, was it
there's
Northland?
Northland, like
Yeah,
Algonquin, Fortis, like those are all good energy companies around here.
yeah, those are actually Michael's Brandon's suggestions. I looked into Northland and looked into Algonquin, mostly
Mm,
because they have their hands in renewables. So a lot of them own wind farms and solar farms and
yeah,
stuff like that.
I know
Um,
Northland's really big into that. Like I think Northland is kind of like leading the way, to my knowledge, in that sort of avenue. Like they got a bunch of big wind farms. I think they're looking at stuff like offshore wind farms,
yeah,
all that kind of stuff. So they're like really innovating in that.
they are. But I couldn't get a good read on like where their position was in the market because I would have to do so much more research. And it just
Mm.
doesn't. And it just seemed like very fractured. Like there's no clear winners, and even in technology, there's no clear winners. I'm like, it's a kind of a long shot.
Yeah, energy is one of those things too, where like you almost have to like specialize in it to a certain degree. I think if you really want to do good and like unless you're buying, like if you're just investing for a long term thing, if it is a good company, like I mean, long term that's fine. But if you're trying to go bigger in the short term, I mean, unless you really know your like energies and commodities and all that kind of stuff, I feel like that's a tough market to be in because it's so competitive. Because those are big monies. Like even if you look at oil and stuff like that, like the guys that trade oil, like that's huge money that those guys are putting in and out of there.
I think it could fit into a portfolio strategy. Like if you wanted some stocks that are like relatively stable, but you wanted a stable income in form of dividends, then it could fit into a portfolio somewhere. Um, but it
Dividends are
wouldn't.
great.
I'm
You
sorry.
have like I was just gonna say dividends are great. Like I love the idea of having like a handful of really good dividend paying stocks. Like I have a few of them, but like just getting that regular paycheck because like it's all about cash flow, right? Like I mean, you talk to anybody who's like really wealthy and successful. I mean, they always talk about like the number one things are your cash flow assets, which is if you have like if you're looking at real estate, like flipping homes is not a cash flow asset. You can get stuck and get
Yeah.
screwed if you're just flipping homes, right? Because you're just going lump sum to lump sum to lump sum. Whereas if you have a rental property, you have consistent income coming in. It's the same thing with dividends, right? You buy a stock and it's like, I mean, pretty much every stock pays a dividend, but a lot of them are essentially negligible, like how much you're going to get. So if you just buy a stock for an investment, that's not a cash flow asset. If you buy a really good dividend paying stock, then that's a cash flow asset. The more money you get in that, the more money you have coming in consistently. And that's how you can keep building your account a lot quicker, especially if you're reinvesting them.
You know what put me off dividends? It was one experience, so then it made me realize I don't know a lot. I need to look into it. But I bought into Ford before the coronavirus, about 6 months before coronavirus. I looked at the chart and I was like, these guys are sold off pretty hard. But then they had an amazing dividend. So then I was like, let's get into this company. If it bounces, great. If it doesn't, I still got the dividend, right? And then the fucking coronavirus hit, and then right after I bought them, Ford announces, "Yeah, we're gonna put a freeze on the dividend." I'm like, son of a bitch! And then the fucking stock tanked like 30% more.
Yeah. Well,
So
dividends are kind of weird too, because like a lot of like I've done a lot of reading on them too, and like and it's one of those things where like over the long term they really pay out a lot more. So like if you have a stock that say is paying like a 5% dividend, even if the stock price itself is only going up like, say 1% a year based on, the overall market, say doing 10 for argument's sake, so you're earning 6% a year on your actual investment. But if you keep rolling those dividends back in, eventually down the line, you're going to hit a point where that 6% that you're making on that stock is significantly more than what you're getting in the market, because you keep reinvesting. So your money in that investment is getting bigger and bigger and bigger. And then eventually you hit a point where it's like, okay, if I had bought this growth stock or, this index or whatever 10, 15 years ago, then at this point now I would have X amount of dollars, but I bought the dividend stock instead and it was kind of lagging behind. But then it almost basically goes parabolic. It hits a point where they match each other, 10 or 15 years down the road, say, and then the dividend one just keeps going and going and going because you just have so much more money coming in that's reinvesting itself. So like in my mind, dividends are much more of like a really like a 15, 20 year kind of game plan. Whereas like a lot of the stocks and stuff I have are like maybe a 5 to 10 year sort of outlook. That's just me personally.
No, I think you're right. You're onto something, because I think the trick is first to identify some companies that are like solid, like they're not going to go anywhere for like decades. And then, but I noticed just recently, to your point, on TD, there's an index you can compare your portfolio to. It's called the total return index, and I didn't know what that was until I looked it up. And turns out it doesn't just calculate the S&P's performance over like say the past year. It also calculates all the companies that do pay a dividend and what happens if you reinvested that dividend over time. And so like I don't know how much the S&P is down for the year, but if you calculate the total return, which is reinvested in dividends, it's actually up 2.23%.
Really?
Yeah.
Oh, that's pretty cool. Yeah.
Yeah. So it's like
like it's like to me it's like retirement money, right? It's like that's your easy cash flow. You get to a point where you have, a few $1,000,000 in the stock market or whatever, which, saying that sounds like a lot of money, but if you're smart about your money, I mean, you can make an average salary, and by the time you retire, having a few $1,000,000 in the stock market is not a difficult thing to achieve. And then with that amount of money, I mean, like if you, what is it? Like you'd have what, $2.5 million in a dividend stock. It'd be like around 100,000 a year in payouts, something like that. So, yeah. I mean, you can easily live like by the time your mortgage is paid off and everything, and you're retired. I mean, you got 100 grand coming in from dividends. You're set, right? You don't have to worry about anything.
So I think that's something I'm going to start looking at some point, maybe not near future, but midterms. Because like what I think we talked about it once on the podcast, where it's like I realized just after this past 2 years that, when you first start investing, or at least when I first started investing, I don't have much. And so like to invest in a dividend stock, it's like it's consistent, but it may be a little bit slow. And then so like depending on your risk profile, like what I did was I just went all in on a couple of and that is a good segue to this trade, but I basically went all in on a few moves, and those moves gave me a giant sum. But then what COVID taught me was that you could take a risk early on because you don't have a lot to lose, but then once you have a lot to lose, it's like your strategy should start to change a little bit. Like I can't keep doing all ins with just an ever growing pot. Like eventually I'm going to get destroyed.
Yeah, and that's why, like, if you talk to any bank or financial advisor, like they have those like different brackets they put you in, right? Where they say if you're 60 years old, you should have 50% or whatever it is of your assets in say
Bitcoin.
GIC, 20% in bonds, and then you have like 5 or 10% in shit like Bitcoin or Tesla or like these volatile stocks or whatever. Not that they're bad, but just that like you don't want to be 70 years old watching your whole portfolio drop by 80%.
Can you even take that stress at that age?
No. Like at that point, it's like like maybe 5% of your portfolio just to like mess around with. But other than that, that's why like at our age, you can do that sort of thing, and we can recover from it because we're still working and everything. So
yeah, so that brings me to this trade. It's the ballsy trade I did like even up until this point, maybe outside of crypto. But in terms of equities, it's still the ballsiest trade I ever did. So what had happened was this was September 2016, and a few months earlier, Tesla announced that they tendered an offer to buy Solar City for X amount of dollars. And the issue was like Solar City was not profitable at all, because the business model I explained to you was basically like it's capital intensive, right? Because they're eating the cost of the hardware first, and then trying to gain revenue over decades over the years, right? And so it's a matter of like how long can you keep raising money for. And then so they got to a point where it was like the customer installations were huge. They were like number two or number one in the US for installations, but they just couldn't sustain the business model. And so Tesla made an offer to buy them because Elon's cousins owned the company, and he actually is a part owner too. And so what had happened was the street undervalued the stock by quite a bit. I think it was about 13 or 14%. Even so, basically, Elon offered X amount per share, and it just like Twitter, even though he offered X amount per share, the stock was trading at lower because they thought that the deal wouldn't go through. And so this is where my qualitative analysis kicked in, because I'm like, I understand the street's fear that it doesn't go through, but I also understand Elon wouldn't announce a thing unless he knew it would go through, right? So I did a little checking, and it turns out so basically the two hurdles it has to go through is basically the board of directors have to approve the merger or the acquisition, and then the shareholders have to approve of the acquisition, right? Even back then, Elon was a cult hero. So then I knew that the shareholders would approve of it. It was just a matter of the board. And then if you look at the demographics of the board, it was basically Elon, his brother, early investors of PayPal, so basically guys that Elon's made money for, and it was basically a sold thing. It's like I looked at the board, I'm like, there's no way these guys would have said no. And so knowing that the deal would have gone through, I sold all my Tesla here. So it was like, I don't know, it was like $13,000 worth. And I sold my box, I sold everything, cleared out all like $23,000. I bought pure Solar City, and I did a calculation. So it would convert. So one Solar City share would equal to 0.11 Tesla shares. Excuse me. So I had 240 shares of Solar City, and we convert to like 50 shares of 50 shares of Tesla. And I did the calculation. Basically, if it adjusted, I would have made $3,398. And then if the market rebounds means like basically Tesla stock tanked right after they announced that acquisition. So I was like, so if the shares converted, I would have just made three grand easily. But if the shares converted and Tesla price went back to where it was at the beginning of the year, I would have made about $7,000 on just that trade. It's just an arbitrage, basically, right? Market inefficiency, whatever you like to call it. Anyway, it happened. I went all in on Tesla, $23,000. The shares converted. I ended up with like 75 shares of Tesla, which today would be about 375 shares after the split. But yeah, like so late 2016 all the way to 2019, 2020, I had only Tesla, one stock. And during that period, the damn shares like collapsed 50% twice, 35% three times. So it was like a nerve-wracking ride. But over the course of that time, let me see if I can pull it up actually, the chart. But
I remember, just like as a side, I remember that whole period because like there was, I think it was right before like Tesla really started to take off, like before the split. It was like it kept chopping around between what was it, like 150 and 220 odd dollars for like it seemed like years, and like it was huge on the day trading side of things because like it was so linked to Elon that like he would tweet something and a stock would just gap down 15% and then it would be super volatile that day. So like everybody loved trading it. And then when I saw it, like I've always liked the company, and then I saw it kind of starting to go up and like really break to new highs. And I think it got up to like $400 or something. And I was like, I remember sitting there, it was like a week. I had a whole bunch of money and I was just like battling with myself. I was like, I don't know if I should just throw all this in there because I was like, I think it's going to go, but like, I don't know. And like, this is like before what I know now. Obviously, if I knew what I know now, then I would have invested in it, but I never ended up doing it. And then I just, sat there on the sidelines, watched it go all the way up to like 2000 or whatever it was pre-split.
yeah, that's exactly what happened here. They announced the Solar City thing, and the stock basically tanked, and then it just kind of oscillated here for a little bit. It made this move because they announced the Model 3, the I guess the broader market car, so it went up, and then the Model 3 rollout was just complete dog shit. So then the stock kept like tanking. Like, what is this? Like, one of this moves was like 33%.
Yeah.
35%. Here's a 50%. I remember that one. 53% in the period in like 1 year.
Unreal.
Yeah, but like so I got in, was it all in was around here, and then it just kind of oscillated a little bit, and then that was the big jump that I started selling into.
Yeah.
But yeah, like yeah, so that was like the biggest bet I made, going all in here and then getting this ride up. Actually, I sold a bunch before COVID, and then COVID happened, and then yeah, I never got all in again because I started diversifying. This is when I realized, excuse me, that you can't do all in anymore. Like, thank the gods that it worked the first time. But you know.
It's tough too, man. Like it takes a lot. Like, kudos to you for doing that because that takes guts, man. I wouldn't be able to do that myself.
You sure? Like even if you knew a company really well?
Maybe. I mean, it's just not my thing either, right? Like I'm not like as involved in individual companies as you are. Like I don't obsess over that kind of stuff like you are. Like I'm more just a trader, right? I just love the technicals and stuff like that. So for me to bury myself in a company and just learn everything about it inside out and backwards, like I don't have the attention span for that because I just don't have the love for it like you do.
Yeah, I don't know where it came from, but it actually is an advantage now I realize, like, because I knew a lot about Tesla, but over the years I've just learned a lot about the EV space and like I'm learning about batteries and I'm learning about motors and everything like that. So like it's helped a lot because so a lot of the new EV startups that are coming out, like I can eyeball it, be like, yeah, it's dog shit, yeah, it's dog shit. Most people are like, ah, but why? But I'm like, just because I've had almost like 10 years of research behind this stuff, I
Yeah.
kind of know what's viable and what's not.
What's
But yeah,
really good about that, though, is like it's the same thing that, like, it's kind of ironic that we call ourselves jack of all trades, but like, you really want to be a master of one. Like that's all you want to be as a trader. Like you hear all these guys like, oh, you got to learn how to do this and that and do the other thing, and you got to go short, you got to go long, you got to learn how to trade breakouts, you got to learn how to do this and that. And it's like it's not true. I mean, like even if you look at Buffett, I mean he's like arguably the greatest investor of all time. And how did he do that? He just traded what he knew. He only bought stuff. He only bought companies that he knew. And it's the same thing with me, like with stock trading and stuff like that. I mean, I have a very, very niche little thing that I do. Like it's not like, I can just hop on the computer at, any time of day or any stock and know what to do and know what I'm looking at. Like sure, I could maybe fumble around with it just because I've seen charts long enough. But like for me to be comfortable putting a lot of money into something, like I need to see exactly what I'm looking for, like exactly what I'm looking for. If I don't risk my money. And it's the same thing with you, right? Like you're not just going to go over to, like Northland Power, for example, or like Coca-Cola, or like just, name your company and just be like, oh, this chart looks great, so I'm going to take the trade here. Like you wouldn't do that because you don't know that space as well. Where if you saw something similar on Tesla or on Neo or on Xpeng or like something that you understand, like I would argue that you would be significantly more comfortable throwing your money into something like that because you know that space so well. I think that's really the key, is that like, you, myself, all these investors, all these traders, at the end of the day, they like everybody, a lot of us trade the same stocks, a lot of us trade the same times a day, a lot of us trade really similar stuff, but every single person who trades in the stock market has their own style and it's very, very specific. I honestly don't know many traders, like I can't even think of any off the top of my head that are like, yeah, I trade this and that and the other thing. And like most guys that I talk to that are like multi millionaire traders, they'll be like, yeah, I trade this type of stock in this range using the 1 hour chart or whatever. Like it's just like these are all my criteria. They got this big list, and it's like if it doesn't tick all these boxes, I don't care. I don't risk my money.
yeah, yeah, 100%. Like guys are scalpers or day traders. I'm a swing trader. Um, like like how many examples in just like in the past like few weeks where it's like, oh, look at Bitcoin, I'm like, oh, it's gonna do this and it did it. And it's like just because I've been in Bitcoin like so focused on it for so long where it's like I know it, but I couldn't do that with almost any other asset.
Right. But that's the key. And then you apply that. So you look at Bitcoin, which is, arguably going to be around forever in the foreseeable future. You look at stuff like electric vehicles, which are going to be around forever in the foreseeable future, then, you're set. Like you just trade those two spaces and you can make a whole career off it. I mean, it's no different than back in the day, like, in the 70s and stuff like that, when you go to the New York Stock Exchange on the floor, like they have the circles. It's like, these are the coffee traders, these are the wheat traders, these are the corn traders. Like there's guys that literally worked 20 years in the stock market. All they did was trade coffee. That's it. Coffee inside out and backwards, worth hundreds of $1,000,000. Couldn't tell you anything about any else, but coffee, I know coffee, I trade it, I make millions of dollars. That's it. I don't need anything else, right?
Yeah, they're those open outcry guys, man. They'll look at like the weather patterns and like the farm yields. Shit.
You get good at something, right? It's like anything. You look at any discipline where you can be a professional. Look at a professional athlete. I mean, you could be a professional basketball player. It doesn't mean that you're going to go play baseball and be, the Michael Jordan.
Michael Jordan.
I didn't even realize that.
But he wasn't that great.
Right? right? Or it's like, you're not going to be a golfer and then just go play football. Like, yeah, if you look at it, it's like, sure, they're all competitive sports, but they're their own very specific discipline. It's the same here. Yeah, sure, they're all trading, they're all the stock market, but they're all their own very specific discipline that you have to specialize in if you want to be really good at something.
Yeah, and actually, there's a guy that supports your argument for that. Have you ever heard of a guy named Herschel Walker?
No.
Any listener wants to look up like a really amazing athlete, look up this guy named Herschel Walker. He's in his like 50s or 60s. He looked jacked like any 20-year-old, and he's just like a superhuman dude. And he played like multiple sports. But the problem was he was never even close to the pinnacle of any of the sports he played because he did everything.
Mm-hmm. Yeah, it's the same thing with Olympic athletes, right? I was reading a thing on Usain Bolt, and he's like, he made some comment. He's like, how I worked, 9 years every day or to run for 9 seconds or something like that. And he's like, people give up after 2 years of working 5 days a week, right? So it's the same idea. But if you translate that into trading, it's like, okay, you work 9 or 10 years to get so fantastically good at doing one thing that you can make $1 million in a day, right? It's like Usain Bolt. He got so good at that 10 seconds of his life when he's running that he is like, you just take that and roll with it and ride off into the sunset kind of thing. Yeah. But you don't get there by fumbling around trying a million different things and doing this for a little while. It's the same thing that we've talked about before, even like with how do you find out what you're good at, right? Because there is so many different things to do, and you just have to try, right? But when you do try, you stick to one specific thing. So like if you're going to try to be a long trader on the daily chart on breakouts or whatever it's going to be, you do that for like, 6 months or so at least, and only do that, track everything about it, see if you can gain some traction. If it's just nothing's clicking at all, pick something else. Then you look at a different style setup. You look at, shorting on a smaller time frame or a bigger time frame, or going long on a different setup or whatever it is. But you have to just really, in my opinion anyways, you have to really focus in on one specific thing. It's like you with your Fibonacci lines, right? Like that's your bread and butter. Like you can draw those things in anywhere and you can always make money off those, because you've tried. But we've talked about this on the show, how many other things you've tried and how they didn't work, or you could just never find consistency. And then all of a sudden you just keep doing one thing after the other. And then eventually you find like, oh shit, this actually works. And then you really dive into it and then you get good at it and you just stick with it.
Yeah. The thing with those a lot of those indicators, like a lot of them overlap. You probably experienced them, right? A lot of them will tell you the same thing. But the problem is when a lot of them tell you the same thing and they tell you some divergent things too, then it's like, oh, which one do I fucking listen to?
Right.
So then like it's important to find the one that you like, and it's like, okay, this is like a good signal that I like to look at. You kind of cut out all the other noise and you can just work around it.
And then you always have to be like prepared to take a loss, like we always say on any trade, right? You can never be overly committed, because it's like you're saying, if you have 10 different indicators and 2 of them aren't validating what your number one indicator is showing, that might be the time that you're going to lose potentially. But you just have to take every trade, and the way that that your system works is by cataloging it and saying, okay, I know that 6.5 times out of 10 I'm gonna make money on this trade, and every time I make money on this trade, it's 2 times more than I lose on this trade. So you just take it every time, and that's just part of your system. Like losing is part of the game. It's just all mathematics at that point.
Yeah, I was just gonna say that. I'm like, I think a lot of people have this mentality where it's like, once you learn this thing, you don't have to be wrong. It's like, no, you should plan to be wrong. Just be wrong less than you're right, and then you're good.
Yeah, or not even that. Like just be wrong smaller than when you're right.
Yeah.
Like if your average loss is 10% of your average win, then you can be wrong 5 times in a row, 6, 7, 8 times in a row, and get one big win. Like the guys that I know that are like that are those guys that are like the all-day fader guys, they call them, where it's like they basically just want to, like, a stock gaps up and they just short it in the morning and then they cover it at the close, and that's it. And they just have this system. I don't know how they do it because it's not my style, but they'll just basically short it right at the open at 9:30 and then they cover it at the close, and like it'll go all over the place, do whatever, but that's how it works. But I see a lot of these guys when they take a loss, they might take a $1,000 loss, $1,000 loss, $1,000 loss, and they're like, okay, it's not working, and they'll just cut it. And then the next day they'll take a $2,000 loss, and they'll be like, okay, that one's not working either. The next day, okay, a $3,000 loss, all right, that one's not working either. The next day, all right, this one worked, I just made 60 grand. So like it's mentally, it's a really tough like style, because you lose more than you win for the most part. But when you win, it's like 15 times bigger than when you lose. So you got to be a little bit psychopath to be able to do that, but
Yeah, it's a different calculation metric. It's like, yeah, I'm wrong 90% of the time, but the one time I'm right,
it's just
I make
like,
1,000 times.
yeah. Yeah, it's wild. Like I know a couple guys that trade like that, and I look at them, I'm just like, man, I could not do that because like it would just drive me insane losing that much.
Man, they must like punishment. Like, I just like wrong, wrong, wrong.
That's what I mean. Like you gotta be a sociopath. Like it's not
Yeah,
human.
that's fucking funny. But
Yeah.
yeah, like remember that the podcast I don't know if you still listen to it, but like I listened to it a lot back in the day. Chat with traders. I remember there's
Yeah.
a bunch of guys on there that were saying like their hit rate was like 50-60% maybe, but then they were very profitable because the profitable trades were they ride them out, and then the losses they cut them early.
Yeah, exactly. And then there's some traders who are the other way where like, they'll lose maybe 5% of the time on their system, but their loss will be say 6 or 7 times bigger than their win. Right. So they'll win like 5%, 5%, 5%, 5%, 20 times in a row, and then they'll lose 80% on their loss. Right. But that system still works because it's just kind of the opposite of the other one. You're making all these small wins and it's enough to cover your one big loss, but that's part of the system.
You know,
So like
that happened to me when I was doing Bitcoin, but because I was playing both sides, so I would be going long and shorting. I would just be playing the whole move. And then what I realized was when I stopped shorting, my win percentages just went up dramatically.
mm-hmm. I tried. Remember when I was doing that for a little while, where like I would get stopped out short and I'd immediately flip and go long and then take it up. But like I tried doing that for a little while, but it just wasn't working for me because like then the times that it would tank, then I'm like, oh shit, and I'd try to get back in short again, and it would just be a nightmare. So I stopped doing that. But there was like there's a level where I know that if I'm getting stopped out, like it's gonna just rip up to the moon, right? So I was doing that for a little while where like if I stopped out, I was like, okay, if it hits my stop, it's gonna be a long. And I did that for a little while, but I just ended up tripping over myself too many times. And I couldn't get enough traction, so I was like, you know what, I don't need this kind of stress in my life.
That's funny. What was it that you wanted to show in your chart? Or you wanted to talk about where the markets were or something like that?
Yeah, I just kind of wanted to look like really maybe just I got another 5 minutes here until I got to take the chicken out of the oven. So
Do you want me to stick to me on the SP 500?
yeah, do you want to just pull up the S&P really quick and we can take a look at it?
All right. Where is
Because
it?
like I'm kind of on the fence. I feel like it needs to go lower at this point. Like I feel like it needs to go down to like the high 350s. To be completely honest.
Oh, you know what's funny? You said that. I did. I was talking to Brendan a few times ago, and I said it looked like it was going to go to the 3,500. That's where like right here, where the bottom was.
Yeah. Yeah. Exactly. Right there.
I wanted to go there.
Yeah.
What
Well, because
is
I
that?
just look at like whenever I'm looking at like S&P, I really like to look at like at least the weekly or the monthly. Like I don't really look at the daily, just because like if you're looking at the daily, like yeah, it can give you kind of shorter term moves, but you're really looking at the broader picture here on the markets, right?
Yeah, here's the monthly.
But,
It's a lot cleaner.
yeah. So if you look there, is that the 1 month?
Yeah.
Yeah. So the 1 month we have that kind of like indecision candle right before the one that we're in now, the red one that we're in.
Yeah.
And if you look at the volume, it's not any kind of significant volume. Like it's not any higher than anything else, right? So that tells me that that's just pure indecision. Like nobody really knows which way it's going. And then if you flip over to the 1 week really quick,
Yeah.
can you kind of like zoom that in so it stretches it a little bit higher? Yeah. So if you go back to what was it, May, like the beginning of May, that big top wick candle there, maybe like 5 back right there, that back, yeah, that one right there. So that one there is on like the highest volume in like the near term, and that's a rejection, right? So that's telling me there's a lot of selling pressure, and that kind of matches up with the big bottom wicks that we saw from back in end of February and end of January, those two green candles. So like those were big, those were basically people trying to buy the dip, and then once that breaks, you have that other candle that kind of lines up with it on the top wick there in May, where that's everybody kind of panic selling out of it. So like there's a lot of selling pressure that I'm seeing, and like I said, I mean I think the 3,500 area, like high 3,500s, is a good place to base. But like at this point right now, I mean I still think we're in a downtrend realistically, because I don't see anything like screaming at me. Like I saw a lot of stuff in individual stocks over the last like 2-3 weeks that were telling me they were reversing. but the overall market is the S&P, and the S&P is not telling me that it's ready to reverse yet. So I still think we have downside.
Trying to see what it looks like in, what is this, the 2000? Yeah, this is COVID. I'm just seeing if there's any similarities between COVID and the sell-off right now. Not really.
Too, is we got that big 400 or like 400 to 4,000, depending which one you're looking at. Like that was a pretty strong line. If you do go to the daily, like it was a fast drop over those levels. So like they kind of tried to hold that 414 sort of prior base level, and it held there for a little while, and then just last week it just really pulled off of it hard.
Oh, this one you're talking about currently?
Yeah,
oh,
like
Jesus, a gap down.
Yeah, like it pulled hard off of that level. So it was kind of consolidating over like 409, 408 well, and it just couldn't hold it. And like when it dropped, like you look at the volume on that the day that we had there on Friday, like it's a pretty big day. But if you look back too on what was the day there, May 20th, I think it was, we had a pretty high volume daily candle where it wicked down, and then we got that big strong bounce off of it. So that's a nice reversal signal right there, and you can see that it did. We hit a lower low than we did on May 12th, but that indication is really strong for a bounce up. So my concern right now is because we had that reversal signal. Again, like the daily is a pretty short time frame, so I don't put too much weight on it for the overall markets. But like we had that reversal signal, we had a really strong push up over the 400, which is just that normal psychological level, and it held there for a while, and now we've failed. So like, to me, if we fail that prior low that we had down at like, the 380 area, I think we're going to go really quick down to that 3,500 range. And then that will hopefully bounce big and support it. Like we need a strong bounce that's going to get us through at least two resistance areas. Like once we get through two resistance areas with strength and sit over top of that, like to me, that would be the true trend reversal signal. But until that happens, we're just trending down. We're hitting resistance, trending down, hitting resistance, trending down. It's just kind of carrying on.
Check that out. That's why I thought 3,500. It wasn't any of the thing chart. It was my fibs. This is a fib extension, and right in the golden pocket, the 618 level is what we're talking about. That price level.
Like I just draw lines based on candles and use the Fibonacci. We always hit the same levels. It's hilarious.
I literally have like two tools I use. They're both based on the Fibonacci, and we both hit it every time using different things.
I look at the chart and I find lines. Well, I guess two. I use volume and lines.
Yeah.
So funny. All right, that's it. We'll call it there. High 3,500s. That'll be the bottom.
When do you think it'll hit? Summer or fall?
I think it'll be fast, man. Like just because of that reversal. Like, and again, I know it's the daily and it's kind of a short-term time frame for this, but even on the monthly, like with that indecision candle, and then the weekly, we have an indecision candle. So we got the reversal candle in the daily, and then we have a indecision on the larger time frame. So like that's an area of interest regardless of which way you look at it. So like to me, if that breaks, it's going to break hard and it's going to be fast. But that's good because if we get a really fast wash, after a fast wash, I mean, look at COVID. You always get a pretty fast bounce back up, and then that's gonna signal everybody to be like, oh shit, look at the deals we're getting, and then they start buying back in, and then you get that reversal. So I think so. I mean, like if that breaks and we trend and we just kind of keep trickling down, that would be worse in my opinion, because that means you're just getting that steady grind. It's the same thing that I look for like when I'm shorting or stuff like that. Like if I have a big parabolic move up into my level, like that's just chasing, that's panic. I can short that and I know I'm going to get a really fast move back the other way. And then that trend is going to reverse and it's going to keep going down. Whereas if I have a really slow grind up, guys that are shorting, they're trying to short and then it just keeps grinding. They try to short and it keeps grinding. It doesn't give them a chance. It doesn't give them a dip buy to cover out. So that's when you get that fast, that accelerating move. And it's the same thing here. Whereas if we're just trickling down, people are dip buying and it doesn't really pop enough for them to sell. And they're dip buying and their positions are getting bigger and bigger and bigger and they keep going lower. And then eventually you get to that point where it just washes out really fast. So we need that fast washout, in my opinion. I hope it happens, in the next month or two to basically hit that 3,500 area and then change the trend. And then we start reversing back up. But if we keep grinding down slowly into that 3,500 area, then I would honestly think that we're going to go quite a bit lower than that. We just need that fast wash to flush everything out and signal the trend reversal.
Yeah, I agree 100%. I'm just drawing this nonsense because I think it's just a pure guess. But like just reading the volume, like especially in the long run, I think what's going to happen is like you're right. It's going to come down really hard, but it's going to be very low volume. It's just going to be a bunch of like loose hands selling, but a
Mhm.
lot of giant jumps in price. Then it's going to bounce up a bit and then come back down, just oscillate a little bit sideways before it goes up, but on really low volume. Like
Yeah.
it's going to be really low volume.
Yeah, as long as we see that 380 level, if we see that break hard and it washes fast, like that'll I'll be happy to see that. Like, yeah, my count's going to go down, but I'll be happy to see that because that to me is going to tell me that we're about ready to reverse.
Now, see that makes me wonder, like, how much is that going to translate into like another stock, like say Nvidia or like Tesla? Because now I want to set up. I have buy orders, but now I want to see if I can match it to this 10% drop on the S&P.
Yeah.
You still picking up Nvidia?
Yeah.
Yeah, I'm gonna look into.
I'm buying all the way down. I'm not trying to pick the bottom. Like I just keep investing every month like I do.
Oh yeah, your DCA.
Yeah.
Okay.
I don't care. Like it's long term, right? I mean, I'm just saying this for guys that are trying to trade the market. I don't trade the market.
You know what
But
would be
like
crazy?
I allocate more cash to certain time frames. So like if like right now, for example, like if I see this 380 break and I see it start to wash hard, I'll probably hold back a little bit of cash for a while because at that point I'm pretty confident it's going to the 350 area. So instead of buying all the way down, I'll try and get a little bit more into the bottom and ideally like maximize my move up. But like
The
I don't trade
VPBR, sorry, the
investment
VPBR is showing some real support at 34.
34.
Yeah, just
Well,
on volume though, transactions.
that'd be the COVID highs, right?
Yeah,
Like the pre-COVID highs, I should say. So yeah, we'll see. Anyways, I gotta take my chicken out of the oven. So
I'm just I'm just wondering if this is gonna happen. This is like February 2024. If we're gonna see a cup and handle, like this is like so far out that it's gonna be probably not even close to it. But it would be so cool if that happened. If we did a
yeah,
cup and handle all the way into like late 2024 and just go boom, like 2025, 3 years from now. 3 years from now, we're gonna see like a new bull market.
that's always what I kind of expected was like it would take probably at least 3-4 years to see new highs. Like as soon as we started downtrending, I wasn't expecting this to hit new highs immediately.
I'm gonna save this chart.
We've all been saying too in our group and everything. We keep saying, in another 3 years we'll be happy we're buying what we did. So that's what everybody's saying. So
That means if we're right, then the next 6 months, 8 months, maybe 12 months is the bottom.
yeah, and then you just keep loading. But you just keep loading up, right? I mean, if you're investing in good stuff, like we always say, you just keep buying in, buying in, buying in, and a few years down the road, you'll be happy because it's the same thing all the time. After those big bear markets or recessions or whatever, you always get the biggest bull markets. I mean, you look at 2008, you look at 2020. I mean, that's when you get your biggest returns. You don't get your biggest returns just when things are kind of coasting along.
This is 2008. This is 134%
In what, three
reclaim.
years? Three, four
Let's see.
years?
It is 60 months, whatever that is. 5 years, 4 years, 60 months.
So 130% in 4 or 5 years. I'd take that.
Yeah, like yeah. That's a pretty crazy gain. I mean, look at the 01.com bubble. It's another 100. So
Yeah.
within a 10-year span, you had within a 10-year span, 130 months or so, you had two opportunities to double your money. So imagine you doubled here and you doubled there. That would have been 4x in a 10-year span.
Be patient. Don't panic. Don't sell when you're down, unless you're in a shitty company. Then you probably want to bail.
Yes, yes.
All right, I think we could probably wrap it up on that note.
All right, sounds good.
All right, thanks, guys.
Later, goons.